He's one of the top market participants and enjoys a considerable fan following among both investors and traders who hang on to his every word. BTTV spoke with chairman and co-founder Motilal Oswal Group, Ramdev Agarwal, about his market outlook. Here's an excerpt.
What is your own reading of the market? The last 4 months have seen a sharp rally. Have valuations gone out of sync with fundamental realities? And where do you see the markets headed and the prices that we are seeing at the current levels?
Yeah. Good afternoon. The issue is that the market levels will keep moving up and down depending on the earnings movement. So every 3 months we have upgraded in the earnings. So we start with the 810 rupees EPS for Nifty on 1st April, and now we'll end up at about say 150, 140 rupees per share. So like that, it will end up finally at 950, 960. So markets will also keep recognizing 5-6% in a quarter or maybe 10% in a quarter. Then it will correct by 2-3% in next quarter. Then again go up by. So that's a process market keeps doing. Move up to the new high, then correct for some time. They over move, like they will overextend itself on the upside. Then they'll correct. Then they might overcorrect. And then again from the bottom it will move. So if you see, that's how. So market is very erratic. It is very difficult to predict the short-term movement of the market. But if you look at 4-5 years, or 10 years, 20 years, 30 years, 40 years, the line looks absolutely straight. So much so that if you do, say, a 40-year straight line, you'll find as if there is no change, there is no corrections at all. But we have seen 40-50% correction also from the highs. So one has to be very careful with the markets. And nobody knows the market truly that what is going to happen. But experience tells me that if the corporate earnings are growing at about 15% or so, 15-20%, so there is no reason why eventually we should not make about 15-17% in the market year on year. In fact, market has done about 13-14% for last 40 years, 35-40 years. So I think the future is even brighter. But let's not be more optimistic. Let's stay with what has happened in 40 years for the next 40 years. So I think in the longer run, we are going to do more like 12-15% compounded from.
Absolutely, Mr. Agarwal, and equity markets are for the optimists. But the worry question right now in front of investors is that do you really feel exuberance in any of the pockets in the markets where you'd like investors to be wary of any bubble-like valuations developing so that one can be cautious at this point?
Right now, across the market or even particular segments, see what happens is many times the whole market is up in the flames. Like what we saw in 92, the whole market was nuts in the sense that the index went up by 7x in 20 months. From 700, Sensex went to 4,200 in 19-20 months. If you go back, I don't think you would have seen that chart. But that's what we lived. So, that was an extreme. I don't think anywhere in the world it would have happened. So that's what is one extreme. But so in 2000, it was all the way technology, the .com and technology, that there was a boom in that particular thing. In 2008, it was all about the financial services kind of thing or real estate companies. So this, and then just 2 years back, we saw boom in digital companies, and worldwide there was so much of boom. But this time around, we don't think, I don't see anywhere that level of exuberance in any sector or market as a whole. Market is buoyant. It's not a depressed market or cheap market. That's for sure. But I don't see, somewhere 50p, 60p, 100p, take whatever is there. So that kind of situation is not there right now. So I think market is broadly distributed. I would say reasonably priced and hopeful about the corporate earnings in next 12 months.
Ramdevji, since you spoke about the sort of historical, in a historical context, let me just add that as a financial journalist, when I started out, the Sensex was around 3,000 and the Nifty was in just 3-digit level. Given the fundamentals and a lot of reportage in the recent days about this being India's decade, India's growth story, what's your own view as far as the Sensex and Nifty are concerned? Where do you see them going over the short term to medium term, sir?
Short term, I have no clue. You have to ask the chartists. They might give you some idea. I have no idea what market will do. I mean, market can very comfortably go down without giving any reason by 10-15%. So, or it can go up by 10-15% on a sustained buying by FIs or something like that. So I have no idea where it is headed, but I'm comfortable wherever it is, and whatever can happen, I'm ready in the sense that 10% done. See, I'm always a fully bought guy, so I'm ready to see 20%, 30% correction, because the corrections are there for 1 year or so. Within 1 year's time, you again get back the price. So, and that's the price you pay for getting 14-15% return. So clearly, the market is poised to do well, and this is called India's. See, what happens is that in short term, a lot of these things look to be very exaggerated. But when you give a 5-10 years time, then you realize what has happened. Like look at the tech. The tech started in 2000. Y2K happened, and we saw the birth of TCS, Infosys, Wipro. I mean, they were small companies. I mean, even in 99, 2000, they were 1,000 crores turnover, 100, 200 crores profit, 300 crores profit. But they become giant companies. 20 years out, 25 years out, they become like 2 lakh crores turnover, 40,000 crores profit, 20,000 crores profit. So you got to give time, and that's in India. You have to give not only time to a company, you have to also give time to the market itself. Today it is a $3 trillion market. In 10 years' time, you will see that this will become a $9-10 trillion market. The issue is that do we have that patience? The market is all about the patience. Do you have patience? I mean, you decide what you want to write, where you want to write, when you want to write, but have patience. And that is what is missing. I mean, look at the option volume, look at the futures volume. People want to make money tomorrow, not even tomorrow. People want to make money next half an hour. That's not the market. At least I am not from that school.
Absolutely. Mr. Agrawal, what would you advise investors to do at this point in time? We are seeing markets at near record highs. Is this the time to fully stay invested? Should one look at booking profits at all, looking at the sharp rally or the sprint in the last 4 months that we've seen?
See, people who are in the market, they need to take their calls on the stocks. If some stock has done very well, it has gone way beyond their own expectation, or they can find a much better bet somewhere else. So there's no harm in selling something and buying something else. But my suggestion would be that don't go out of the market. Stay in the market. But either you stay with your current investment or sell something and buy something else. But stay in the equity, stay in the market, because you don't know what is going to happen tomorrow or day after. And while you are sleeping, market might go up by 2%, 5%. You will never be able to recover that.
आर्या मेहर ने जमशेदपुर से ये सवाल भेजा है, और सवाल ये है कि can we invest now when the Nifty is near 20,000, or have we missed the bus? FOMO, the fear of missing out, रामदेव जी. प्रश्न ये है, सवाल ये है.
मेरी क्वेश्चन सही है. This, please understand, it is not all-time high for next 5 years. It is all-time high for last 75 years. The all-time high of next 5 years will be at least double of this. Are you getting what I'm saying?
Absolutely, absolutely.
And if you make it next 10 years, then all-time high will be 3x of this.
Watch the full exclusive interview on our social media channel and on our YouTube channel, Business Today.